a trend reversal as such. So it's right now the charts are still into a selling mode, and you might probably want to just about keep this under more like a wait and watch.
Okay, so that's on some of the QSR names and how they're shaping up on the charts. But let's get some more views on the technical front. We have Rudramurthy Devi, founder director at Vachna Investments, joining us on the show. Rudra, hi, morning. Good to have you on the show. Talk to us about your sense on the direction in which the markets are headed, because right now they're totally stagnant. Talk to us about some levels that you're watching out for.
Good morning, Sneh. Thanks for having me in the show. See, definitely this market is a grinding market. It is very sector specific and stock specific. Especially if you are an index trader, this is a market to avoid. Also, this is not a market where you can short and make money because you are getting bounces in between. So I am very clear you have to be very sector specific and stock specific in this market. Make your leverage next to zero. Stay with only the stocks and sectors where there is definitely positive momentum, and you have to avoid the general basket. See, for example, if you see PSU banks, stocks like SBI, and even for that matter, Bank of Baroda, Bank of India, these are all few stocks where definitely there is strength. And if I have to see metals as a basket, yes, look at especially aluminium and copper in metals, followed by steel. There are also some stocks like whether it is National Aluminium, Nalco, or for that matter, Hindalco, even Hindustan Copper, Hindustan Zinc, any dip in any of these names which I have mentioned in metals, they look a very, very good buy. So for me, metals is a theme yet to continue, and still it will have a long way to go. Next 2 years, 3 years, any dip you get in metals, get into these names which I have mentioned. PSU banks again look strong to me, and select capital market theme also. Look at the recent results from Angel One, which was very good. So capital market is another theme which can do very good. Even BSE on dips can be a good buy. So it is all metals, PSU banks, select themes like capital market which I mentioned, and even IT, slowly select IT stocks are also doing very good. Look at, for example, Tech Mahindra, or even for that matter Infosys, which came with a good guidance this quarter. So for me, these are all very selective sectors and stocks you have to be in. And if you are an index trader, you have to avoid this market. This is not also a market to short. And to make everything very clear, three things you have to keep in mind. Wait for dollar rupee to come down, and I want at least 89 rupees or even below price for a dollar. Wait for FIIs to turn buyers, and please wait for Donald Trump and his tariff issues to get resolved. Then only this market will start moving on the upside.
Sandeep, earnings so far, we've seen financials, private sector financials come in, we have seen IT which have come in, and we are also in the middle of the earnings season. What is your assessment how the earnings have been so far?
So overall, earnings have been fine. I think there is no disappointment, but there is no big earnings surprise, at least from the large cap side. Metals obviously has done well because the underlying metal prices have moved up, and they could do much better in this quarter also because the full effect of the price increases will be seen in the fourth quarter and maybe the next quarter. So I think result season is okay, but then it doesn't give a trigger for any significant upside immediately.
Okay. Yes.
Sandeep, pleasure talking to you today. Thank you very much for joining us today in the studios. Sneh.
Yes, so time to get in some mid-cap bets now from our technical experts. Kunal, you go first. What's looking good from the broader end of the market?
So I'll go with the one Oracle Finance, a stock which over the last couple of days has seen a very good pickup. The stock has come back into a strong bounce back from its previous 52-week lows. So look out for 82.50 as a target. Stop us at 78.50.
Okay, and Rudra, what about you? What's looking good from the broader end?
See, for me, Rain Industries looks very strong. Stock has given a clear breakout above levels of around 139, 140, and having tested this resistance level, now acting as support. For me, Rain at current market price is a buy. Look at initial targets of 175 and then 200 to come on Rain Industry. Keeping a stop loss of 130 on a closing basis, it's a 1:6 kind of a risk reward from current market price. So a buy on Rain Industry.
Okay, so that looks good. Rail Industries is the pick coming in from the broader end. But let's refocus and tell you what else has been happening globally. Trump has linked his aggressive push on Greenland to miss out on the Nobel Peace Prize, saying he no longer feels bound to think purely of peace. He refused to rule out force, warning Europe of fresh tariffs if talks fail. And Fed Chair Jerome Powell will personally attend Supreme Court arguments this week in the case testing Trump's power to fire Fed Governor Lisa Cook. Trump moved to sack Cook last year, alleging mortgage fraud claims. And big headlines coming in from Davos. Maharashtra Chief Minister Devendra Fadnavis told Times Network that the state is positioning itself as India's most attractive investment hub with strong investor interest across manufacturing, technology, data and green businesses. He also added that a third Mumbai is being envisioned as the next growth engine. Advertising legend Martin Sorrell says India is the world's fastest growing major economy and praises PM Modi for strengthening both brand India and brand Modi. He says India is now the economy of choice after China as Beijing pivots away from the US. Abhishek Lodha of the Lodha Group says data centers are now core infrastructure critical to making artificial intelligence come alive, with Maharashtra emerging as a key consumption and investment hub. On clean energy, Girish Tanti of Suzlon says India is firmly on track to source 50% of its power from renewables, targeting 300 gigawatts by 2030. Yes, that's everything that's been happening globally and on ground at Davos, but shifting focus back to the markets. Time for an ET Now exclusive. We have learned from our sources that the government is likely to announce more measures to support the renewable energy sector in the upcoming budget. Prakash Priyadarshi is joining us with more details on what all of these measures could be. Prakash.
Well, what we are learning is that the government is likely to provide further push to renewable energy sector in the upcoming budget. Sources indicate that government may announce next phase of PM KUSUM scheme with some additional features. So very significant development coming in. Sources indicate that the Ministry of New and Renewable Energy has sent a new proposal to the Ministry of Finance for its consideration. In fact, the current scheme is set to lapse in March 2026. Therefore, a new scheme with some additional features have been prepared by the Ministry of New and Renewable Energy, which has been sent to the Ministry of Finance with a fresh plan to push decentralized solar projects in the agriculture sector. You are aware that the government has allocated approximately 2,400 crore under the first phase of this scheme to achieve approximately 35,000 megawatt capacity of solar energy. Along with that, government provides incentives for decentralized grid-connected solar power, solar pumps and feeder-level projects under this scheme. Now, a fresh proposal has been prepared with some additional features that include higher incentives and new technology, along with the private participation. In fact, the government will encourage private participation by reducing a compliance burden. Along with that, battery storage will be promoted. In fact, this new feature has been added under the revised scheme to make it more attractive. And sources indicate the government is likely to allocate approximately 50,000 crore for this project, for this scheme in the upcoming budget.
Okay, Prakash, thanks so much for taking us through that. So yes, there could be a big announcement on the renewable energy space and the green energy space when it comes to the budget that's just around the corner, about 10 days away now. And some of the beneficiaries from the PM KUSUM scheme involve some of these solar companies, some of the pumps companies like your Shakti pumps, Oswal pumps, you have MV Photovoltaic on the other side, and of course, a whole bunch of solar players that could also be in focus. Kunal, most of them are very recently listed, but anything looking good to you from the renewable energy space, let's say an NTPC Green, for example, that has chart history?
Not much, Sneh, because these stocks have been continuously falling. Lack of buyers, lack of volumes, no major push in terms of indicators. In fact, the RSIs for these stocks are sub the 40 mark, but they are not yet oversold on the charts. So what happens is if the stocks go into a series of downtrend, there comes a point when the downtrend intensifies, and in that zone you expect that the stocks go into oversold indicators. But that's not the case for many of these renewable names, let alone names like NTPC, etc. Because the stocks have gone through a very gradual kind of a correction, and that I believe is one of the concerns. So in this regards, you would expect volumes to pick up somewhere down the line for the stocks to look a little bit more attractive. Right now, we are not seeing that happening for the stock price. It's just that 90, 85 levels is a good zone where the prices have taken support twice in the last 1 to 2 months. maybe that's a good support point the stock is holding on as of now. But if those supports also break, then you might expect that this downtrend which has started off for the last 6-8 months, that would continue for these stocks.
Okay, so that's on some of those renewable energy, clean energy stocks. But shifting focus from that to insurance, LIC is in focus today following Citi's buy call, highlighting its re-rating potential and attractive valuation. My colleague Mitali is joining us with more on this note as part of the big bold brokerage call of the day. Mitali.
Citi Group has reiterated its buy rating on LIC, citing the target price of 1325, seeing an upside potential of around 66% over last closing price, now citing strong fundamentals and also significant re-rating potential on the stock. According to Citi, LIC's valuation, it remains depressed relative to its underlying fundamentals, even as the operational performance continues to improve. Also, the brokerage highlights that the market share recovery is already underway and supported by new product launches and a normalization of individual APE it sees ahead. Citi also expects the margin outlook on the company to improve by a better product mix ahead. This includes a gradual shift towards the non-par segment, annuities, and also the retail protection, which are structurally more profitable. On profitability front, Citi sees strong visibility in the new value of new business with steady growth expected over FY26 to FY28. The firm adds that the current valuations do not factor in the mark-to-market gains in the embedded value, which it believes is unjustified. The brokerage notes that upside for LIC will be driven by core embedded value strength, a robust asset liability management framework, and minimal concerns around the capital adequacy or liabilities. So overall, Citi sees LIC to be well positioned for a fundamental re-rating and hence has raised the target price to 1325 rupees.
Okay, Mitali, thanks so much for taking us through that. So, Citi is quite bullish when it comes to LIC. Rudra, weigh in over here and talk to us about your view on the insurance space. How are you seeing LIC panning out? The stock has not done much in the recent past, but what's your outlook on LIC on the charts? Or if you're liking any other insurance player that looks more attractive on the charts?
Sneh, if you look at specifically LIC, it has broken a crucial support at 850. Having broken that 850 support, now any bounce to those levels, again, it will see some amount of supply for sure. So for me, LIC is not the stock to be there as per charts. And even if you see for that matter, HDFC Life, that is also breaking a crucial support, and that is also not stronger for me on chart. So the level on HDFC Life is somewhere at around 730. So that's the last support which it can break, and that chart is also weak. But two stocks, if I have to pick from insurance sector, definitely one will be SBI Life, which is relatively very strong. And SBI Life for me, at every dips from current market price to 2000 will be a very good buy. And if you want to stay in insurance, stay with SBI Life. Another stock which looks stronger relatively to me is Max Financial. So MFSL is another stock where closer to these areas of around 1600, it looks a good buy. So selectively on insurance, if you have to play, then I'll be only with SBI Life and MFSL.
Okay, so those are some of the preferred picks from the insurance space. Kunal,